All right, so we're diving into something a little bit different today. You sent over some information about this EquiTrust MarketFive fixed indexed annuity.
Yes.
And I gotta say, annuities, they've always seemed a little like a mystery to me.
Right.
I mean, I get the basic idea. They're supposed to help you grow your money for retirement and make sure you don't run out. But like the specifics of how they actually work, especially this whole fixed indexed thing, I
Mm.
think it's worth really digging into. And our goal today is to really figure out if this particular annuity could be a good option for folks who are, getting closer to retirement and trying to balance that need for growth with the need to protect what they've already saved.
Yeah, absolutely. And all the info we're looking at today comes from Diversified Insurance Brokers. So,
Right.
you know, that's at our source material.
Okay, perfect. So let's jump right in. What exactly is at the core of this EquiTrust MarketFive? I mean, what makes it tech?
Well, when we were looking at all the stuff you sent over, the first thing that really jumps out is that it's a 5-year fixed indexed annuity, which basically means it's designed to help you grow your retirement savings, but it does it by linking that growth to the performance of certain market indexes.
Okay, so it's tied to the market, but it's not like directly invested in the market, right?
Exactly. That's where that fixed part comes in.
Okay.
It offers some protection against those scary market drops.
Okay, so growth potential, but with a safety net. I like that idea.
Yeah.
So how does the growth side of things actually work?
So the Market 5, it actually lets you choose from a few different market indexes to link your growth to. You've got the S&P 500, which most people are familiar with, that tracks those big U.S.
Yeah,
companies.
right.
There's also the S&P MARC 5% excess return index, which that one's a bit more focused on capturing kind of those longer-term trends. And then you have the Barclays Focus 50 index, which is a global multi-asset index. So it's mixing things up a little bit.
Okay, so a decent range of choices there.
Yeah, and what's really interesting is you also get some flexibility in how those potential gains from the indexes are actually calculated.
Okay, so like what are the options there?
Well, you've got things like point-to-point, which that compares the index value at the beginning and the end of a specific period. You've got monthly average, and then you have participation-based, which means you get a certain percentage of the index gains.
That's pretty cool. So you can actually tailor it a bit depending on how you think the market's going to perform.
Exactly. It gives you some options.
Okay, so we've got a handle on the growth part. What about this safety net you were talking about? Like, how does that really work?
So here's the key thing with the Market 5. The index credits can never be negative.
Wait, so even if the market takes a nosedive?
Even then,
Huh.
the return that gets credited to your annuity for that period, it's just zero.
So you don't actually lose money based on the index performance.
Exactly. Your core account value, it's protected from those index-linked losses.
Okay, that definitely takes some of the fear out of things.
Right.
So beyond choosing your index, are there any other ways to kind of customize this annuity?
Yeah, absolutely. So one thing you could do is actually make additional premium payments over time, so you're not just stuck with what you initially put in.
Oh, that's nice.
And then each year on your contract anniversary, you get the chance to adjust how your money is allocated between the different indexes and the crediting strategies we talked about.
So if your outlook on the market changes or your circumstances change, you can adapt.
Exactly.
Now, what if you need to access the money before the 5 years is up? I mean, is that even possible?
So it's designed to be a longer-term thing.
Right.
But there are some options for accessing your funds after the first year. You can actually withdraw up to 10% of your accumulation value each year without getting hit with those standard surrender charges.
Accumulation value, that's the total amount that's grown in the annuity, right?
That's it.
Okay.
And then there are also some waivers for specific situations, like if you need to go into a nursing home or you're diagnosed with a terminal illness, those allow for penalty-free withdrawals too.
That makes sense. Those are some pretty major life events.
Absolutely.
Now, the material also mentions some guaranteed protection. Can you break that down for us?
So there's this thing called the guaranteed accumulation value, which basically means that after that full 5-year term, the value of your contract, it's guaranteed to be at least 105% of all the premiums you paid and minus any withdrawals you took.
Okay, so even if the indexes don't perform well, you're still guaranteed to have at least made a little something.
Exactly. And then on top of that, there's this minimum guaranteed contract rate, which guarantees your contract will be worth at least 87.5% of your premiums plus a minimum amount of interest.
So it's like a double layer of protection.
Yeah, you've got those guarantees working to protect your principal no matter what.
That's reassuring. So what happens to the annuity if the policyholder, passes away?
In that situation, the full accumulation value is paid out directly to your beneficiaries.
Okay.
And importantly, it happens without any of those surrender charges or market value adjustments, which I think is really important for making things easier on your loved ones.
Absolutely. Okay, so last thing, this annuity is backed by EquiTrust Life Insurance Company.
Yes.
What should we know about them?
Well, it's always good to do your due diligence, right?
Right.
EquiTrust, they're known to be a financially strong company. And one thing that stood out to me was that Magic Johnson Enterprises actually holds a majority ownership stake in the company, which is interesting.
Yeah, that's definitely a name people recognize.
Right.
Okay, so to sum it all up for our listeners, what we've been looking at with this EquiTrust MarketFive, it's essentially a financial tool that aims to give you some growth potential tied to the market, but with some really important downside protection built in.
And I think the key takeaway is that it offers a lot of flexibility in how you contribute your money, how you allocate it between those indexes, and then it also has those guaranteed minimum values and options for getting your money out if you need to.
So for anyone out there who's, getting closer to retirement and trying to figure out how to make their savings last, but also still keep growing,
Yeah,
this could be something worth considering, right?
absolutely. It's all about finding that balance between taking part in those potential market gains while also making sure you're shielded from big losses.
So as you're thinking about your own retirement plan, think about where a tool like this with its unique combination of market-linked growth and downside protection, how that might fit into your overall strategy. What other questions does this deep dive into the Market 5 bring up for you as you keep planning for your financial future?
Good question to think about.
Thanks for listening to the deep dive.
Yeah, thanks for having me.